Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services. And after seeing a meaningful recovery last week, some profit booking and consolidation this Monday morning when we started off the trade. And as I speak to you, Sensex is down close to about 180 points. Nifty is down about 50 odd points, and Nifty Bank is down about 250 odd points. Levels are 57,675 on the Sensex. Nifty is at about 17,250, and the Nifty Bank is at about 36,200. Broadly, a little bit of sell-off, then a recovery, then a sell-off. That's the kind of trading that it's visible on the screen, and I think it will stay this way. And meaningfully, right? So because last entire week, if you go to see, we have recouped quite a bit of lost ground, and after seeing that kind of recovery, it is only prudent to see some consolidation and profit booking. This may continue for a couple of days. Of course, it will depend upon triggers. Locally, I don't see any great events, but globally, as we all know, the situation, there has not been any improvement as far as the Russia-Ukraine crisis are concerned. Crude oil, after correcting sizably, has kind of bounced a little bit. As I speak to you, Brent is trading at about $111 per barrel, and NYMEX at about $108 a barrel. Rupee dollar seeing some strength, but this morning with a slight bit of weakness, we have inched up a little bit above 76 rupees to a dollar, 76.05 to be more precise, as I speak to you. So I think this trading or this range bound move will be there unless you have some kind of escalation in terms of negative news flow on the geopolitical situation. And what is given to understand is that Saudi Arabia is likely to produce more crude oil, taking advantage of the crude oil prices at a higher level. I think earnings for some of these large crude oil producing countries and companies should reflect upon well. So, for example, Aramco in Saudi Arabia has announced that since the crude oil prices have moved up north, they are likely to throw in a little bit of more crude oil in the international market, which may possibly see a little bit of easing of depending upon what is the kind of production uptick that they will see. On the markets front, well, we are nearing the financial year end, and very soon we'll see earnings unfold for the fourth quarter this financial year. Expectation is that the IT sector will do well, according to what verbatim that was shared by Accenture. I think the entire IT pack looks quite healthy in terms of earning visibility. And in our earlier conversation, I think the sectors that we highlighted, and every time I have spoken about IT, so try to get into IT stocks in case if you've missed the rally. My sense is that earnings will reflect upon the share prices, and there could be a re-rating of most of the frontline and some select mid-cap IT names. So likes of TCS, Infosys, HCL Tech, Tech Mahindra, L&T Technologies, Coforge, Mindtree, Persistent Systems, Science Limited, just to name a few names. KPIT, I think these are some of the names you should look at buying opportunities. And along with that, the announcement by the government to increase the bulk prices of diesel is likely to weigh upon certain sectors. Remains to be seen that at retail level, how much when the prices are moved upwards as far as retailing of petrol and diesel is concerned. But I think for bulk users, increasing diesel prices by about 25 rupees to a litre is going to weigh a little bit on certain sensitive sectors. So you need to be a little bit careful over there. Overall, I think other than IT, banking, a contrarian call on autos as I speak to you last time, metal, cement and FMCG. I think FMCG is one sector which may possibly see a little bit light of hope, given that the raw material cost push has dented their margin in the second and the third quarter, and post that we've seen some companies increase the product prices, be it HUL, be it Nestle, etc. So you should take opportunity of this consolidation and look at FMCG sector also, given the fact that India is primarily a consumption-driven economy. So my sense is that we are in a little bit stable ground, and I hope that there is no eventuality in terms of the geopolitical news flow or some bad news from China as far as the resurgence of COVID-19 is concerned. Other than that, I think one thing that I'll definitely be looking forward for is, of course, the earnings season and the outlook thereafter. And the prediction from the Met Department in terms of monsoon. As of now, the earlier predictions are that this year also we are going to see normal monsoons. Rain gods are going to shower their blessings as far as our country is concerned, and that again is a huge positive. So try to get into the market in case if you miss the rally. Highlighted couple of sectors and stocks. I think it's only prudent to look at them, hoping that the situation improves globally and we are on a much more stable wicket. Thank you very much for your patience hearing, and I'll see you again next week. Take care. Bye bye.